Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. 6 weeks ago we had a small gap-filling recovery halted by a couple of smaller roadblocks. The first, and to me the most significant, was the bright red neckline extension, currently at 529.25, of the April to August 2024 head and shoulders top. A bright red neckline that throughout mid to late May through to early June, the market tried turning into a base of action, which it also tried to do early last week. The second, and to a lesser degree, obstruction was the July 23 high at 526.5. A congestion I also pointed out 8 weeks ago, and one familiar from that gap last week and the highs this week. Anyway, the action 4 weeks ago had been quite interesting with a third gapping move higher, but a gap that had no intention of becoming an exhaustion gap, as prices pushed further up through some stratified congestion all the way through the 61.8% absolute Fibonacci line at 553.25 and developed two new patterns, a V top formed over mid to late July and a dark blue mid-April to late June bullish shift pitchfork. 2 weeks ago, prices moved out through the dark blue upper tine, currently at 563.25, and tried utilizing this breached dark blue upper tine as a base for a move up to tackle the next resistances. And they were the February 23 high at 565 and the congestion at 569.25 to 570, containing the September 22 low and the August 21 high. That one was at 573.25. I should now point out that at the start of July I also said, and I quote, "I suspect this newly drawn dark blue bullish shift pitchfork may become significant part of this commodity's future, so watch and see," end of quote. So 2 weeks ago, to try and cope with this move higher, I drew a mid-July to end July based short, extremely acute bull channel. I said about this at the time, and I quote, "I'm not in love with such an acute bull channel, even though this looks like the best of all the ones I've seen in oilseeds and veg oils. It is still very, very steep, and I would retire it in a heartbeat if it was compromised. That all being said, it does work for now in showing the way higher in this market," end of quote. Well, it stopped working 2 Fridays ago when the market made a combined bearish opening long black Mariposa and bearish engulfing pattern that shot down right out of the bull channel. From this move lower, prices punched back down below the combination of the green short medium moving average as well as the bright red neckline extension, finally starting to stabilize from where the original rally started, and that's the congestion between 513.25 and 519.5, dating from September 2012, and also from early May this year as well as mid-June and early July. It is early days yet, but this seems to be a genuine pullback higher from the very recent fall, but it's not an exciting pullback as yet. One thing all these moves mean is that though we still have the dark blue bullish shift pitchfork, I no longer feel comfortable with this pattern, having seen both the dark blue upper and lower tines breached within the space of 3 weeks, and not a proper break either. It's one hell of a series of false breaks. And now watch carefully, try and identify the new pattern setups. Winnipeg Canola. Just one pattern still shows, even now, still shows the overall way forward here. This longer term pattern, when I spoke about 23 weeks ago, when I said, and I quote, "I've also drawn in the meantime a March to December 2025 bullish Andrews pitchfork. This pitchfork, highlighted in bright pink on my daily chart, has so far withstood the tests of the lower time, right back at the start, and an almost test, pretty significant almost test, late 2 weeks ago of the bright pink overhead middle time, currently 857.40, when the market rose, approached, and then shied away from truly testing this bright pink middle time. falling lower for bearish Arami and an outside day 2 Fridays ago. As I said here for weeks and weeks, I think this pattern is very important for now and in the future, so please just keep it in your mind and keep a watch on it. Now, the fall lower has so far been halted by the slowly rising green short medium moving average, currently 772.80, as well as an earlier all-time high from March 2008 at 770 even. However, should the fall continue, look out for further support below from the rising mauve medium moving average, currently 757.60, and more importantly from the 38.2% absolute Fibonacci line at 750.10. All these actions prompted me to draw last week a new pattern to describe what is happening. A late April to date very large broadening wedge pattern, highlighted in dark blue, and that's currently 722.5 to 859.5. This is a very large pattern and it utilizes a dark blue extension to the late April to late June head and shoulders pattern as the lower trend line. As I said last week, and I quote, "I think this might be the pattern to watch going forward." End of quote. I still think the same today. Bursa Malaysia crude palm oil. So, as I've done here for most of last year and now into 2026, I'd recognize the wide congestion area that was overhead, but which became support, then a big congestion, and now a support once more between 44.08 to 45.59. Prices, which had since late March been up over it, bar one failed attempt lower mid-April, finally punched their way down through it 12 weeks ago, but could not sustain the move lower with an original gapping action higher, changeover or otherwise, which topped out a number of times since the end of April to date. We seem to be close to finishing these heartbeat movements of up and down. Prices pushed higher 2 weeks ago, significantly higher, up through the bright green upper bear channel line. That's currently 46.02 of the bright green April to date shallow bear channel. That's currently 42.66 to 46.02, leading me to lay out some potential targets topside for this break higher, with a primary target X up at 48.80 and a secondary harder to reach target X1 up at 49.51. Both are around resistances. The former is around the high for this year at 48.88, whilst the latter is just under a pair of 50% Fibonacci lines, especially the 50% Fibonacci line of the July 19 to March 22 move at 49.64. However, that move higher ended up as a shooting star pattern, type 1 bearish, which casts some immediate doubts on the break upwards. However, I will still maintain them again this week as we seem to be stabilizing over the bright green upper bear channel line. Now, that was a lot to digest, but I'm afraid there is still more. You see, this all still comes down to a piece I have previously spoken about. I noted the recent rising lows and fairly static highs of a bullish incentive and a new pattern emerged. An early May to date ascending triangle pattern, highlighted in dark blue on my daily chart, currently 45.22 to 46.66. 2 weeks ago I said when the market started looking at the upper trend line again, and I quote, "There are no targets for this pattern as yet, as we have just breached and not broken the pattern on the upside. But I can once more lay out some potentials for what could be either a break higher or maybe lower if this breach higher turns out to be a false break out of the ascending triangle, this ascending triangle. Thus the primary potential on the top side will be plus 241 ringgits from a confirmed breakout from the ascending triangle pattern, with a secondary harder to reach potential of plus 344 ringgits from a confirmed breakout from the ascending triangle. Please note, even now we have the possibility of false breaks, so please pay attention to this. Thus, just in case this is a false break higher, we have a primary potential on the downside of minus 151 ringgits from a confirmed breakout from the ascending triangle pattern, with a secondary harder to reach potential of minus 344 ringgits from a confirmed breakout from the ascending triangle pattern. Now, it is time to see hopefully by next week if we will have targets topside or not." End of quote. Well, I'm afraid to say that with that shooting star pattern, type 1 bearish, that we saw 2 weeks ago, that there are still no firm targets yet, but the potentials are still valid. I'm now wondering, the market seemingly stabilizing over the bright green upper bear channel line, whether this might lead to a possible targets soon. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.